Hey, and a very good morning to you, and welcome to Friday, March 25th, the last Friday of the month for March 2022. I'm Andrew Horowitz. I'm the co-founder of TriggerCharts, and we have a good amount of things to talk about today. Obviously, not here last week. Had to, at the last minute, change plans, and so we did send out at least you got a notification, hopefully, that we didn't have the meeting. But we're back. Here we are, and there's a lot going on over the last week in terms of markets, obviously, that changed the complexion a bit from where we were just a couple of weeks back. So that's something to consider. Before we make any further progress in our discussion today, I want to mention and I want to make sure you're clear that this is for educational purposes only. It is not a recommendation to buy or sell any security. And the fact is that investing, as you know, involves a substantial amount of risk. And that's something that you need to understand, that you can lose money. Yes, you can lose money. Our goal is to make sure that you have all the tools that are available, the best-in-class indicators, information, and ways in which you can have a higher confidence in your trade so that that loss mitigation and profit opportunity are firmly seated in your daily routine. So with that, we're going to discuss a variety of things. As you know, each and every, did I record this? I think we're recording this. Yes, we're recording. Each and every, by the way, the recordings are available over on TriggerCharts.com as well as on YouTube, our YouTube channel. So you can check out all the reruns, if you will, get some popcorn, get a beer, and watch the reruns of what we talk about each week. Because again, a lot of what we talk about is education about this whole area of market profile. And market profile is the idea that we take the combination of two major components of what is important in trading. And it is nothing crazy like some weird algo that goes out and looks for Twitter feeds. No, we're looking at actually what is going on. We're looking at volume. We're looking at price. We're taking each and every trade and putting it together. And yes, we are creating our own calculation through an algo that we developed. And basically what that does is it gives us I would say a fingerprint or a footprint in the sand of where traders are buying and selling, where they're willing to put their money up, and where there really isn't any significant amount of trading that will lead to a very wide range of opportunities. And you can see from the chart on the right, when we look at where we are right now, for example, we've seen a very substantial and a V recovery to a degree. Of course, we had a couple of fits and starts, 1, 2. So it's a bit of a W, maybe not even a V, right? That is going on right now. And what you will notice also from the chart is there are areas that there are very little other lines that are drawn on the chart. You know, you notice that there's a green line right here, right? There's a red line right here. And there's blue lines, or cyan, if you will. Well, what we do is we look for those areas that have very little for anything as we look to the left. And looking left is really important. When we look left, we want to see where there's not a lot of areas that have a significant amount of other indications, where we can see a vertical move quickly through time and through price, more importantly. This right here, folks, is a very quick move through time. The very quick move through price, as opposed to the chop you get when things are consolidating. And when that happens, what you have is a slow move over time. This right here, this area, that was this consolidation, was from November through February. And that didn't go anywhere. This move right here is the last, let's count them together. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 trading sessions. We're talking about a half or a third, let's say 2 weeks, 2 trading weeks. So this is why when we look at horizontally consolidating slow movement through time versus very quick movement through price is what we're looking for. And both that works on the downside when you see these big moves on the downside and you have a significant drop through price, or the move on the other side, which is the move on the up. We're looking for those holes. We're looking for those areas of just nothingness. Now, you can see, again, in this whole area here, I'm going to expand it all the way into here. Not much when we look left, so something to think about. Well, with that, let's talk about where we are here. Let's talk about the beginnings of the themes for this week. Trounce and bounce. Got a big trounce. People got scared. Then they said, you know what, the hell with this. We saw big ticks down, held on that line that we drew at about 318, though, and then bounced significantly, maybe a bit too far at this point. Something that we'll have to look at. This is just the cues you're looking at on the right, but we can see a very similar look, feel, and chart pattern to all the major indices that are in the U.S. in particular, and some to a degree in other areas. But volatility is still high. The VIX above 20 means that we're going to see significant volatility, less than when it was above 30, of course. But we still have a VIX that is elevated, and it looks like there was a lot of options expiration that went on into last week, right about here, into that move, and then a follow-through with thoughts that maybe the war is over or going to slow down, Ukraine pushing back Russia. Wow, that's amazing. But we have a trounce and bounce, and was there a hidden buy signal in here somewhere that caused the incredible amount of move to the upside that we saw that seemed a little bit, I would say, suspect? And the reason I say that is that we got to a point that when you look at things like pricing and yield on the 10-year, inflation numbers, economic numbers, the price of oil, the consumer confidence, some of this doesn't match. Now, that doesn't mean that it always has to match. Just remember that. Write that down. It doesn't mean that it has to match. And above that, say economics, my outlook, TV commentators, doesn't have to match what happens in the markets. And it's really important to understand that. When we look at where we are in terms of how far we've come down, how quickly, because this was a really quick move. This was, we'll call it, where is this now? This January, the big move that we saw, the first big move down to the end of January into February, big move up, very similar to what we're seeing now, and then a rotation back down. Are we going to test those lower levels again that we saw in January, February? I don't know. I'm not in the prediction category. I think that we could say that, and I think it's reasonable to assume that this needs to consolidate a little bit, and I would venture to say that maybe we can get down to the 350 range again from where we are right now. The 360 has a 3.5% move on the 3% move on the downside. Probability is that we'll get somewhere here. We drew these lines in some time ago because those are important lines. We are above this 356 line that we drew in a few weeks ago that we said, hey, you know what? That looks like an important level. Next level, where are we talking? Probably right here, probably about the 369 level. And I would say that right about there. There is some congestion there. There's some peaks there. There's some, if you look at where we are, there's some recovery levels there. There was a non-ability to confirm back up again. There was a downtrend where clearly this sharp, let's draw this correctly. This sharp downtrend we broke, right? This downtrend channel, we broke up right about here and it's moving up. So this is an important chart to consider. Again, looking very similar to the other ones. Debate really right now is there a recession ahead? Are we peaking out in terms of inflation? Are we seeing that there is a significant amount of opportunity that is going to come due to blank? Well, if you really think about it, maybe inflation has peaked. Is it possible it's peaked? Maybe. I don't think so. The Fed is getting very aggressive. The more they talk, the more aggressive they seem to be. Have you noticed the conversation tone shifting? And that's another reason why you want to think about what is going on with regard to the markets. Oftentimes, the markets say, hey, you know what? We've come down too far, too fast in a bear market. There are these wicked bear market rallies that happen only to get, we'll say, succumb to the reality eventually. And the reality is that's being painted right now is a bond yield on the 10 that is yielding 2.35% or so. And then on top of it, let's take a look real quickly where we are. Bond yields, 2.37. 2.37, moving up again today, 2.37% on the 10-year. You're seeing the threes, the fives and sevens inverting. I think sevens and tens, 5 and 10s, both inverting. Those are signs of an eventual potential for a very clear opportunity for next leg of a recession. And that is what the Fed is doing. Make no mistake about what is going on. The Fed is trying to slow down. This was something that I never really understood. We talk about don't fight the Fed, but only when it's in our favor, right? And people go, don't fight the Fed. Well, okay, the Fed is lowering rates. What do I do? Well, they're liquefying the economy. They're doing bond buying. What do I do? Okay, I'm not going to fight that. Fact is that stocks are pretty, they like that. All right, let's turn the tables. The Fed is increasing rates. They're bringing liquidity out. They're trying to contract the economy. What do I do? Oh, I keep buying stocks. What? The backdrop is no longer buy the dip. It's sell the rip. It flips. Everything flips. Think about yourself in the upside down right now, where you lived in a world that seemed logical for about 10 or 12 years, where every dip was bought. Stocks did nothing but go up. Even when they went down, they seemed to go up. But all of a sudden, we're in a situation now that while the stock market is a market of stocks, there's no question about that, the fact still remains that you have to be aware of where the trend is. Now, the near-term, short-term trend is clearly up. Longer-term trend is down. So we got a bearish signal on the longer-term trend, but we have a bullish signal on the shorter-term trend. And I'm just going to skip over to something and show you that we could see that. I'm going to go down here. That we are seeing on a weekly basis. We're on short profit. We are long alerts on the daily, but look at how the short terms, if you look at the top here, there's the only indicator you will ever find that will have multiple time frames on one particular line to make your life really easy. So looking at the top here, we got the 30s, the 60s, the 240s, the dailies and the weeklies. That's how this is set up. It can be set up differently. But 10, 21, short terms, all long. Long alert that turned all around. We see that right here on the cues right there, right? And a short profit on the weekly. If we were to change this over to the weekly, you'll notice that. Is this weekly? Interesting. Should be a short profit. Oh, it's because of pre-market issues. But basically, you have a short profit here going into a long entry potential on a weekly basis coming up. SPY probably looks very similar. Let's go back to daily here. Look at that. It's almost a spitting image of that. I bet you the the Dow Jones looks the same. Different, a little bit different, where we have a long alert. It's still not there on a daily basis, which is interesting. But it's a good way to grasp where we are when we look from right to left. And this is another discussion. Everything we always talk about is looking from right to left, looking right to left. What is the long term? What is the short term? Right here, we're seeing the VIX is short 2 weeks. Not much going on. VIX usually has that go on, but we're seeing a long-term trend higher for rates right there across the board. Gives you a good signal and information on that. Volatility, I mentioned that. Somebody asked me in the text about, or the chat, I should say, and you can ask me anything you want in the chat, by the way. Put all this in here. And that's chat should be blinking on your screen. They asked me about where is the KRI. Let's take a look at that really quickly. Here. So what I see is the KRI is a +4. Now let me give you some examples and show you something that's really important. What I found this time and this route of the market, we didn't get down as low as we saw, for example, back in December, or in January, back in the January period. We still kind of crashed through. We didn't still see some of the signals that were there, which I found really interesting. But what we're starting to do is finding signals now. Usually I try to look for these levels where I see a dot on the KRI, program this so that when we see a consecutive amount of drops and a few other things that come in below 4 or at 4, -4, you start getting these clusters formation. Now, I want to show you something. This is much better at calling bottoms than it is tops, and there's a reason for that. The reason is that generally market participants are buyers, not shorters. They may be sellers, but they don't short. They don't press a short. However, they will, in fact, press a buy. In other words, if they own positions and they are in it for the long haul, they will look at that opportunity and say, I'm going to buy. Hey, wow, look how low the price, I'm going to buy. They will sell maybe here, start selling, but the vast majority isn't going to start shorting into any of this. Whereas, the opposite is interesting as well. When things are going higher, look at this chain right here and all of these clusters that form. Yeah, they do show a drop and they are a precursor for some other things that happen. But look how many you get here. You only get a few on the downside and then they pick it right up. The reason for that is on a short-term basis, is that when they get nervous and they sell but they don't press and they in fact buy when it's low because they think it's a bargain, they also don't want to lose out on the opportunity to make money on the upside. So they buy here too. So most investors are buyers as things are going up and buyers as things are going down. Now, yes, they will sell it somewhere over here and they will get eviscerated and get their money taken from them. But the fact remains that they'll start buying again very quickly because they don't want to lose out. Many of the sellers that came right here, and look at how equal this pattern is right here. Look at that. They started buying again because you don't want to miss out. What if that was the bottom? Oh my God, what am I going to do? So right now the KRI is a +4. It is getting a little bit staunchy in the upside. We also saw that the McClellan is seeing an interesting level up top here where we are significantly showing a complex level on the upside. So it's still not totally like, I would say this is more of a complex over zero. This is straight up and a bit of a complex, but rolling down. Not 100% qualifying this as a restart of the next leg of an upside of a bull market. Spearman also is saying, hey, you know what? We're really getting on the top end of the curve here. Look at any time. It could last for a while. You get above this 90 line, which we are right now, right here was what, 98. That was a bit much. But you get above these levels and then you start rolling. You have to roll first. You can't just say it's above and that's it. You have to roll. And once you roll, that's a real concern when you combine it with all of your other technical and psychological indicators. Rates around the world, very hawkish. There's clearly a slowdown ahead. And why do I say that? Why am I saying there's a slowdown? Horowitz, what are you talking about? I mean, look at all the numbers we're seeing. We're seeing that the manufacturing numbers in the U.S. look pretty good, and the PMIs yesterday out of Europe look pretty strong. Our unemployment, look at the jobless claims just out yesterday, sub 2,000 once again. And consumers are doing okay. Okay, that's fine. But here is the fact. The world central banks are deliberately attempting to slow down the overall expansionary process due to a crazy amount of inflation. Now, some of it they can do and they can deal with, and some of it can't. The wartime inflation that we're seeing due to oil, natural gas, wheat, corn out of Ukraine and Russia and peripheral areas, as well as the continuation of the pandemic inflation due to supply chain issues, particularly out of China and Asia, is causing a lot of problems. That is not necessarily something the Fed can do about. However, they're going to do what they can to slow down the economy because that's the only tool they have in their toolbox to actually fight inflation. And when you listen to either Janet Yellen or Powell or any other players like Bullard, they're looking to bring up interest rates towards the 2 to 3% range by the end of this year. That's what they're talking about, the end of this year. So I'll tell you and I'll ask you and I'll say to you, and I'll pose this to you, are we abiding by don't fight the Fed to a degree? Now, understand, there are some areas that will do well. One of the things that's in our portfolios right now is a larger positioning into things like energy-related stocks. Now, that will go up and down depending on what's happening in the world of energy, but man, they've been on fire. And you look at some of the other things like, trying to maybe say, hey, what about the banks? Well, the banks are good if yields go up, but if the yield curve starts to invert, not as good for the banks. They don't lend out on that circumstance. What about consumer confidence? Looking pretty poor. So these are all advanced indicators of what's to come rather than looking at what a lot of people look at simply is, wow, what are we doing right now, right at this moment in time here? We don't have a slowdown in employment. We don't seem too much of a slowdown in manufacturing. But when these prices start to really click in pretty well, and people say, finally, you know what? I'm not buying that. I'm not spending the money on that. I just can't do it. One of the greatest ways to fight higher prices is to have higher prices. Think about that. Okay, so I'll mention that we're not going to do a poll. Should we do a poll? Let's see. I got a poll. I think I have a poll here. Let's see here. Yeah, let's go here. There's a poll for you. Ask this every once in a while. Buy, sell, or hold. Are you buying, selling, holding, shell-shocked? Probably not a lot of people totally shell-shocked, I would think. Or trading. We'll get to that, back to that in just a moment. Let's turn our attention to some of the names that are out there. And like I mentioned, look at this. We're at 2.4, still going higher on the 10-year. So we're between a rock and a hard place right now. And what I mean by that is if the war ends, rates skyrocket. If the war doesn't end, it will keep rates subdued. If rates are subdued, there'll be this thought that maybe it's not as bad as we think. If we do see a war end, well, maybe oil price will come down. They'll think that, hey, you know what? Maybe we won't have the inflation that we have and we could bring down rates. There's a lot of hope and theory out there, but this is moving up way too fast. And 2.5 on the 10-year is just right around the corner. And that is a demarcation line for a lot of people. The fact that we're seeing the NASDAQ rally into this is absolutely pretty crazy. NASDAQ down when rates were 1.8, 1.9 off of the bottom was freaking out. The tech names were really upset about it. The valuations were coming in. And maybe we overshot to a degree, and I'll go with that. I think that there was a lot of excess selling going on. The fact that Bitcoin is also rallying in this gives you a bit of, I think, some pause. You have to think about the fact that, why is Bitcoin rallying? Why is gold, although gold's down today, why has gold been rallying so dramatically? And I think that a lot of that is the concern that there is the potential as you start mentioning things like chemical warfare and nuclear warfare and biological, people get freaked out. It's not a pleasant thought. So let's keep a watch on rates right now. VIX is up a little bit this morning. I mentioned this as a stock that is, I would say, a proxy to a degree for coinage. They're a bank that does a lot of work in the crypto space, something to look at. Off the bottom, got downgraded a couple of times, came out with earnings that were just soft and okay. But if you look at where we are right now, the launch off of 133, that was a pretty good situation right there. You're going to probably see actually good overall momentum right now. This is a position we had for a while and then gave up on it as it was coming through this area. Probably should have got back into it about the 130, 140s. Then again, you could have probably said that for anything recently. Twitter, off of the bottom. Interesting area for Twitter. If you can get above, and again, you just simply take your box tool or you could take a line tool and you can draw where those areas are. And we pretty much stopped dead on that area yesterday, give or take a couple of pennies. That, you have to be careful. Don't get totally immersed and consumed to the exact penny. That's not a good idea because things will overshoot all the time. But where are we? You do seem to have some upside opportunity at 42.30 on a daily chart. Now, we're using daily charts because we use daily charts. There's no rhyme or reason to this. You could change this, and if you want to trade on a shorter term time frame, like 60-minute, 30-minute for a day trade, that's very reasonable to do. I don't like to go under that. Please try not to do like 1 minute and 3 minutes. That's just, you're not going to get anywhere, and you're going to wonder 2 months down the road, what happened to my capital? Because unless you're trading in very, very large size and very quick, the probability is not going to make a lot of money going there. Here's something that's very interesting. The EWW, I found this yesterday thinking, wow, you know what? That's pretty amazing. This is the ETF of Mexico. ETF of Mexico. All-time high. All-time high. They don't care about any pandemic issues or really the war. Nope. Moderna. This is looking for a fourth vaccine that is going to keep on going. But again, stop right on that level right there. If you get above the 181, you could draw that or put an alert somewhere on that. There's nothing you do. Just go over to here and put an alert. But stop right there. If you get above, I would say, Right there. So what is that? 177. 177. Well, then you got to get past this little nub. But okay, 178. Where it is now, give or take. You still have an opportunity up to about 211 if the stock cooperates. If. KBH came out with earnings yesterday, dropped down, did recover a bit. This is not really great for the housing industry. You can see this is the poster child of higher costs and inflation and higher interest rates. Higher interest rates will slow down the housing market as well. Some of the meme stocks had a great day, one day, and then started falling down again. GME, Gamestop came in with a pretty big, exciting situation. Went from about 92 up to 125, and people say, well, how would I have caught something like that? Well, if you had your short-term trading on, and maybe with the radar on, you would have had an alert right there if you would have seen that. This is a long entry. Maybe you wouldn't have caught it all, but you would have caught from about, let's say 90, we'll call it 99, up to about 120. Broke out again and kind of went higher again. But still, 99, 120, 20 points or something like that. It's pretty good. K-Web, that's something I've been talking about, and I mentioned to you and watched that as a proxy for the global tech trade. Dropped off a cliff, but then had a 50% retracement in a day, 2 days, or whatever that was, right? It was 21 and went to 30 in 2 days. Now, it's still hovering in this area. We are seeing some momentum build here. There is a lot of roadblocks still with this particular name. And what you have to look at is, look at the bonds. It's ticking up 2.429 right now. That's why you're seeing the NASDAQ get a little bit cranky here. The overhead is about 33 right here, but you have a lot of room to really trade inside this range right now. It's holding up really nicely at the $30 range. We're seeing the momentum on the aileron indicator. All these indicators are available over on the trading app store for TradeStation, of course. You can grab those at any time and find out how to get that over on TriggerCharts.com. Got a few other names here. Cook, just a disaster. I own a Traeger. I like my Traeger. I loved it when I first got it. Then I'm like, no, not really. This is pretty much my love affair with Traeger has been this chart. MJ, another move up this morning on the pre-market on the marijuana ETF alternative harvest. We have companies like Tilray ticking up very dramatically after the thought that, well, maybe Congress is going to vote on something when it comes to federalizing or legalizing on a federal basis pot. So pretty cool. Apple at 173, quite amazing, this return, especially due to the fact that there is a significant amount of potential for cost factor increases, slowdown around the world, blah, 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 right? But this recovery, really a lot of this is baked into already the NASDAQ. This is what has happened. You can see it trades pretty much right alongside the NASDAQ as the number one largest stock in the NASDAQ 100, so that's kind of important. But what I would say here is another situation that looks a little bit beyond its britches from an overall standpoint of recovery. We're really close, not too far away from the 180 that was the all-time high back here in 2022, right? That was the all-time high, right? Yeah. And we're above that right now. Where are we at this moment, though? I would say that a lot of right there. 175.40 is probably, I would think, a top end right there. Breakthrough there, you could definitely go to new highs, and it will probably scoot right above 177 right to the 180 line. URA, a lot of people look at this. This is the Uranium Etf, and that is holding right towards the top of a breakout. You break out next 28 from 26. And we talked about these other names. I feel like I forgot one up here somewhere that I want to talk about. This is going to be a volatile day. You can see this by what's happening with the bonds. I mean, this move on the bonds, is this today? No, this is, what day is today? This is 60 minutes. Let's do a little bit. Let's do, here you go. Why is it? Oh, yeah, it's 9:30. That's why. Look at that move. 2.36. I mean, you're talking about a humongous move up overall. AG, silver mining, they're doing well. You got a top end right here, 1430. Then you're off to the races, it looks like. Let's see. Yeah, but you have a triple top going on here. You can connect all these lines here, this one, here. You really need to get above that. I'd be surprised that happens. You're seeing waning movement on this side over here. Hey, thanks for joining me. We'll be here again next Friday. Make sure to see you then. Have a great trading day.